And welcome into Market Talk for this Wednesday, December 8th. Great to have you join us once again. I'm your host, Jesse Allen. Thanks for making us part of your day. MarketTalkAg.com. That's our website. That's where you could find us and find all of our streaming sources and all the latest news of agriculture, market information, and more. It's all online, MarketTalkAg.com. Well, we had a fairly mixed batch of trade here today as we are one day ahead of the USDA December WASDE report. We saw soybeans with good strength, corn pretty neutral, and wheat futures took a little bit of selling pressure on the chin here today. So we got plenty to discuss. Let's bring in our good friend Mike Zuzolo with Global Commodity Analytics. Mike, good afternoon to you, sir, and a very eventful trade day today, and eventful with a lot of macro news out in the markets, and then of course we got the WASDE tomorrow. So, your initial thoughts, reaction to Wednesday's close?
We had a lot of positive tailwinds, Jesse, on Wednesday, including macro tailwinds and currency markets, with the Chinese currency hitting a 3+ year high during Wednesday's trade. And that was in part due to them coming in and pushing $180 billion of U.S. currency related reserve requirements, liquidity into their banking system a day or so ago. And, we've got some really nice looking emerging markets, and that's in part due to the COVID strain, that Omicron strain, maybe not being as severe. It's certainly contagious, but maybe not as severe as the trade was worried about. And so we had the Chinese currency up, we had the Brazilian currency up over 1%. So we had macro tailwinds. Then we, had quite a bit of supply demand tailwinds as well, with that almost 73 million bushel purchase of corn from Mexico, another small purchase of beans from China. Ethanol numbers for the week were supportive. Then we had the EPA reportedly coming out with their new update on their mandate for 2022, giving us 15 billion gallons of ethanol blend, which that was kind of my no-go gauge, was not to go below 15 billion. And so, I felt like, and I'm leaving a couple things out, I felt like this market had a lot of support underneath it heading into Thursday's report. But I think the wheat market, once again, being our leader, showed us it wasn't ready for launch. And that shows you exactly what's going on in the corn market, with the corn being able to hit that 589.5 resistance, something you and I have talked about. That opens the door up in the corn if we can get above that on a weekly close. So big numbers. And that's why tomorrow's or Thursday's report is going to be super important. But wheat in particular, weaker, and we can talk about why if you like. That'd be fine.
Well, let's break some of this down, and let's start with wheat. I think that's a decent spot to start here because that was really under pressure today and really accelerated to the downside. I know there's some poor technical looks on the chart here. There's maybe some worries about higher Australian or Canadian crops on Thursday's report. Just felt like a lot of this pressure just helped us. We just accelerated to the downside with maybe some of those computers and algo trades on the day Wednesday.
Yeah, I think that's exactly right. And I think another third element that came in that really offset the weaker dollar and the uncertainty about the Baltic wheat and the Russian wheat in particular, given what's going on with U.S. and Russia relations right now, is that the exchange, Rosario Exchange, came in mid-session on Wednesday and pushed up their wheat estimate for Argentina to over 22 million tons. I think that was versus a 20 and a half roughly expectation earlier, and it compares to a 20 million ton expectation by USDA in their last report a month ago now. And so I think you're right. I think the expectation is the supplies are swelling, and it's not uncommon, in my opinion, that the trade comes in and sells the wheat off right before a WASDE report, because other than a couple months this past year, 3 months this past year, it's been pretty rough sledding for the wheat on a WASDE report, especially from a world standpoint. And I think the other thing that the trade really is not pricing in at all, while they're pricing in some South American weather for corn and beans, they're not pricing hardly any problematic weather for the hard red wheat belt. So the hard red wheat getting hit the hardest today on the trade, I think, is indicative of the world wheat number going up in the trade's mindset. So I think they just pushed some premium out of the market, added some discount so they don't get shocked by USDA's figure on the world numbers tomorrow.
Well, as we look at, tomorrow and get that into focus, a lot of folks, you mentioned quite a few of them just a minute ago, the different macro factors that are out there. But I know you and I were chatting a little bit today, and I know you wanted to take a look at this, and I think it's great. We should look at this maybe from a different angle, from the job side and from gold. So, why don't you talk to us with some of your thoughts with how you're kind of approaching this report and just the general market tone right now?
Yeah, and I should preface this with the idea that I like to look at both the fundamentals and the technicals, and my analysis typically will be fundamentally driven, and then I'll go in and look at the technicals to see if they match up or not. And so I probably wouldn't have presented these two charts to you this week and to the viewer this week had it not been for the reserve requirement cut by China, had it not been the sharp decline in the US dollar and the emerging markets starting to come back around because the lack of fear now in the Omicron virus and the 52-week moving average holding in crude. And what we talked about last week was our three major canaries in the coal mine for this market, not to take out last week's lows, was the crude oil, the copper, and the wheat. And that's still very much in play as we go into USD's report. But what I wanted to show you first was the jobs report or the gold, whichever one you got first. This is the jobs report number. This is a chart from Bloomberg, and it really shows nicely what's happening. And this goes to the bigger picture to me, Jesse, is that it's not just about the containers and the shipping problems in the supply chain. That I believe this is still cost push inflation in part because of the shipping issues and the container issues. But those are symptoms of the bigger, what I would call disease of less workforce out there. And it's not just a US workforce, it's a global workforce as well. And you can see it really glaringly in this chart where the first half in the top is US total job openings hitting over 11 million people again in terms of jobs available. And you look at the bottom half of the chart, and it's really important to go all the way back to 2015 where that chart starts. And you had about 2.25% of the population, pretty much holding steady that didn't want to work essentially, or they didn't want to quit their job more precisely. And that has gone all the way up to 3%. This month's number for the month of October was the first decline since May. And so that, I think, is the disease that we're fighting in this inflation battle, and why I think this inflation battle is going to stay around a lot longer. And this leads me to the gold market and what's been happening in the gold. This is a monthly spot gold chart. And you got to think of this from a standpoint of ever since the financial crisis. And that's where I drew this timeline from 2007 to the current market. And if you look at the very bottom, there's a blue arrow that points downward. That's a stochastic oscillator indicator. It's a kind of a sentiment indicator that I have kind of worked and massaged and tried to optimize to give major buy and sell signals. So it's a proprietary sentiment indicator that I've worked on over the years. This is the first potential buy signal on this monthly chart since 2018. So you're talking about something that has been not bought into from a standpoint of the stochastic for going on 3 years now. And it's interesting because if you go back a little bit further then and you look at the previous 3 years, you have a kind of a rough cycle of 3.5 years from low to low in the gold market. And this indicator, this sentiment stochastic indicator kind of picks that up. So that's the technical sentiment side of it when it comes to the funds. But what would be driving this fundamentally where gold is all of a sudden a buy and this buy signal is valid other than that wedge coming in and being oversold? Well, it goes back to Bitcoin. It seems to me Bitcoin's no longer the shiny new metal that the investors and the new retail speculators want to buy into anymore because it's had such a big break, 20+% here in the last week or so. We also have an increased war threat with Russia, China, and Iran. That's something we haven't seen in many, many years. And then this Omicron variant, if the COVID's really not going to be an issue, then the trade will probably come in and want to buy the precious metals again. I think that's been a real limiting factor that's kept us sideways in this gold market for essentially all of 2021. So I love that wedge formation. I love that monthly buy signal. I'm giving some fundamentals out there why I think it could break higher. And then you just sit back and you see how we close out this month.
Well, great stuff, Mike. And I just want your thoughts. A lot of folks are talking about tomorrow's report, and you've highlighted a lot of great things heading into that report. Just in general, I know historically we don't see a lot of changes. Are you Are you fearing maybe that we would see some unexpected moves tomorrow, or do you think for the most part we're probably going to get a status quo type of report?
Yeah, I think the best way for me to answer that, because I'm like a lot of people, I feel like the January numbers will have most of the big numbers in them, especially as USDA gets prepared for their agricultural outlook conference and have more of their I's dotted and their T's crossed. I think other than the world wheat number that I talked about already, Jesse, that's probably the biggest black swan out there that I could see coming in. I think the only other way I'd frame this report is that I could see several of these headwinds that used these headwinds that are now tailwinds, both supply demand wise, like South America's drought. It's increased, it's intensified in some areas. It's not gone away since the last WASDE report. But I could add up more reasons for the market to go higher after the report, especially since we don't have the Federal Reserve talking until next week and we have the dollar breaking, then I would give reasons for the market to go down after the report. So my biggest concern is just a general torpedo from quote unquote torpedo of bearish information or something bearish from USDA, like a corn yield increase. That would be the first thing on my mind. Or they would raise back up the bean yield after taking it down last month. These are the kind of things that I think would really hurt the potential for all these indicators that we have pre-report to let the market try and go up. D's corn 21 before it goes off the board breaks through that 589.5 high, breaks above it on a weekly close, gives us a true breakout. The cash market's already ahead of it, steaming ahead with stronger prices right now, so on and so forth. So that's kind of how I lay into this report. I'm ready to buy. I'm ready to re-own. I'm ready to hedge higher levels. I'm just hoping USDA doesn't sideline me on that.
Couple other thoughts I wanted to run by you today. The EPA numbers came out yesterday, of course. What are your thoughts on those numbers and how they are affecting the trade here, today, and could affect it moving forward? I've heard quite a few people say that it's just kind of a mixed bag, kind of ho hum. I mean, you think about the 2020 number. It already happened. I mean, it's not really, that's not going to do much. 22 number back up to 15 billion. That's a positive, I would say. I guess I don't know what's just your general thoughts with those numbers from EPA that came out Tuesday.
Yeah, really good question, because going back to that gold chart in 2018 when we made those big lows in gold, that was a deflationary mindset. That's when crude oil was nasty too, and that's when we had to really worry about just getting to the blend wall and meeting the RFS mandate. We're in a totally different situation right now. Until the Federal Reserve really steps on the gas pedal of raising rates, we've got an energy market that is supporting the ethanol industry with really good break evens, and I don't see that ending anytime soon. And so I feel like we have less pressure from a policy standpoint. It's more economic supply demand fundamentals now that EPA has said what they're going to say at this point. And so I think between that and the fact that they did not give exemptions to small refiners like the small refiners wanted, the best thing that I saw after the comments came out from the news wires were actual quotes that Reuters reported from big oil. And I loved their quotes. Like, so much for the Biden administration wanting to cool energy prices. These are the kind of things in ag that I want to see. I want to see the big oil energy guys saying this is not a fair deal. That's what I like, because I want ethanol to be able to be utilized more and more and more. So I feel like overall the EPA numbers were very supportive for the corn market, and it's not going to take any domestic demand away from us that maybe the export demand will start to come online, because we have been slow on the export demand. There's no question about it. And time is kind of running out as South America gets ready for that next crop.
Well, that segues as well into my other question on the grains. South America, I know you talk a lot with colleagues in South America. You mentioned how things are starting to get dry. Any other thoughts about that South American crop, or anything else you could add for us here, just with how things are looking there and how that could affect us moving forward?
Yeah, I mean, I think the biggest thing I see on the weather, and I'm no meteorologist, but I've been looking at it and I've been trained by a really good meteorologist over the years. And I think the biggest thing that I see in the models is this consistent inconsistency where it has been putting rains in the hard red wheat belt, putting rains in the pampas regions of Argentina. And keep in mind, when you look at the areas that they grow corn and beans in Argentina, they line up pretty nicely compared to the equator with where we grow wheat and corn as well. And so I feel like that the models are about useless after 5 days out, Jesse. And these people that are saying that we're going to get rains in the Argentina Pampas regions, probably are going to be disappointed if history serves or if my experience serves me well. Southern Brazil may be a little bit different. I think they're going to get some rains. They're going to be able to eke out at least an average crop. And so I am going into 2022 similar where I was last year, that Brazil's going to be a good crop. Argentina's not going to be so good. I still wonder about the Brazilian second corn, safrinha corn crop because of the fertilizer. So that's kind of how I'm laying it out. And I'll be putting out my first estimates on the South American crop here at the end of this month.
Mike, let's segue over to livestock. This hog market is just taking a beating this week. And we tried to recover today, but that didn't last very long. I think maybe an hour's worth of trade, we were in the green in some contracts. What are you seeing with this hog market right now? It just doesn't want to seem to find any upward momentum and really doesn't want to find a bottom, it seems.
Yeah, you're right. And this that is not about demand at this point, I don't think, Jesse, based upon some of the retail numbers that USDA has been passing along each week. Pork is starting to move better and be featured more against the beef and more against the poultry. And the price is not that elevated in the pork side of the equation, nothing compared to what you're dealing with in some of the cuts for the chicken and some of the cuts for the beef. I really think, and I hate to oversimplify things, but I sincerely feel as though this market, all they're looking at right now in determining their price is where's China. And it's kind of like the Wendy's commercials. Where's the beef? It's like all they care about is where's China. And I think they are truly convinced at this point that China is not going to be a major importer of pork in 2022, and that we're going to backfill a lot of supply back into the domestic market. And I am concerned about that, but I'm not nearly as worried or upset about it as I think others in the trade are. So I feel as though the hog movement has been strong. The cutouts, while I'd like them to be higher, they're also keeping the consumer really involved and engaged in purchasing, and they're not losing demand. Whereas I think the beef demand, other than this holiday demand, I'm really getting concerned about it.
Well, that's a great way to put that. I like the oversimplified version of that, Mike. Just you think about some of the issues with the U.S. and China right now. You mentioned those earlier in the show. Yeah, it could lead to definitely could lead to a little bit of a discord between the U.S. and China here moving into next year. On the cattle side, the feedlot country again, we're looking for higher cash this week, starting to get a little trade trickle in here as of Wednesday afternoon, but not a whole lot. Futures a little bit lower, under pressure today. What's your thoughts in cattle?
This goes back to that jobs chart that I showed you, Jesse. I kept scratching my head. This must be about the supply side. It must be about the supply side that I'm missing something on the supply side when it comes to this extra supply of beefs. And so therefore it must be the demand is better than what I thought it was, because I've been a supply side bear essentially at these price levels or higher. And what I have happened to come into play with and find out through our own experience of trying to eat out and do a carry out order this week, when I got tied up and I didn't want my wife to have to cook, I decided to go ahead and buy her dinner, but do a carry out order. And we have had that ever since the pandemic, much like many in your area, I'm sure too. Well, then I was watching a video from a Dallas news talking about the retail markets and the restaurant demand. And they said that Dallas area restaurants are cutting out their carry out orders and takeout orders because they can't find the labor. And they're concentrating on their dine in only because they can't find the labor. And that's exactly what happened to us. One restaurant didn't even pick up their phone. The other restaurant had an automatic message saying, we're not taking takeout orders anymore because we have labor issues and our dining room's packed right now. We're going to try and make the most money in the restaurant itself. So more power to them. But I really feel as though we're losing some demand here that the market just doesn't understand, can't grasp a hold of yet. So I'm still very much a hedger at these price levels, and I'm at my overvalue level at this 143 level in April fat cattle, very ready to pull more triggers for first and second quarter, as soon as I see the WASDE numbers tomorrow.
Great stuff, and we'll be looking forward to a busy Thursday ahead, I'm sure, with that WASDE report. Mike, if producers need to get a little advice, a little help from you and your analysis with global commodity analytics, I know they can do that very easily, can't they?
Yeah, go to globalcomresearch.com. There's a lot of new information on that, and just call me or send out a trial request and request a password and just mention the Market Talk Ag video or Jesse's program, and I'll be happy to set you up for a free 2-week trial. Also, I've got some new meetings scheduled, took one off, added one. Go to the calendar of events. There's going to be a local one here in Atchison in January. And if you need a speaker, you need to talk about the ag markets, please keep me in mind, and we'll get something worked out.
Mike, I appreciate the time as always, sir. Have a great rest of the week, and we'll talk to you next week.
Thanks for having me, Jesse. Have a great week too.
Mike Zuzolo with Global Commodity Analytics. Find him, globalcomresearch.com. That's going to do it for Market Talk on this Wednesday, December 8th. I'm Jesse Allen. Have a great afternoon.